I'll be out of the trade as fast as I got into it, but I'm willing to take the risk on the trade, even though the volume is marginal here. It is 7:55 a.m., 7/7/2014. In our live trading room, we have identified with and taken a short trade to the downside on ES. That is S&P 500 E-mini futures. You're looking at a 1-minute chart. Current prices are trading 72 and 75 mark to the market. 15-minute indicators are clear to be short. At the very beginning of our move, that's established once again at the preferred entry at 1973 here. Once again, this will either be a move to the downside or prices will find this area as support and then trade to the upside after a 1-minute blow off. Right now, the 15-minute indicators are clear to be and remain short. MFI now marginally down. Your 15-minute chart. Initial level right here for support, 72.75 is hit. And once again, this will be support and traded back off of, or we'll get through and then we have some nice moves to the downside here, getting down possibly to some of this area and lower, even on some of these lows that are located at around this point. And 75. Holding at 72, 75 traders. $1,036 lots traded at 755, 701 at 756, and here on the testing of support 73.25 back here and at around that point 914. Once again, we've hit 72.75 here on a 15-minute chart. This entry is called at this point because of under the pretense that prices will either keep trading to the downside or turn right back around. And if we did, we have once again have the best possible fill to be short. Now, trading up at 73.25. That's trading up at 73.25, up a tick since the preferred entry at 73. If prices can hold 73.25 or possibly a tick above, there is an opportunity for prices to continue to move to the downside. MTM at 73.25, 73.50. That's down a half. Down a half. Any more than that, one would consider getting out of the trade because prices are turning back around. Chicken money flow is now marginally up. MFI is now marginally back up. $73. $73. We had a test back down to 72 and 75. Okay, now we have chicken marginally back down to flat, down to flat. Accumulated volume is fair. I'm looking for the continued move now to the downside. 72.75 MTM. On a 15-minute chart, once again, we are here at 72 and 75, people. Still holding at 72.75 for support. $72.75 and holding. $72.75. 73. Still holding the floor at 72.75 on a 15-minute chart. Anticipating additional volume to come in, drive the prices to the downside. The 15-minute indicator set up across the board is clear to be short. 73 flat. We do know the longer the hold time on the trade, the larger the open risk becomes. The setup is good, still strong. Looking for the additional volume come in again, people, to continue the move to the downside. Down, close, and play. Checking money flow. Current configuration is here. After getting off of resistance here, it's outlined by this area. Holding. Just need about 1,500 contracts traded short, and we'll be good. (8:06 a.m. 7/7/2014). And now we have some additional volume coming in here. Not much. 469, 472. But it is obviously very clear that we have a fair amount of accumulated volume here at this price point. The initial volume that came in here to drive the prices through the support level 73.25 appeared to be clearly a sell. Stabilized here, looking for the additional leg to the downside. Holding at 73 flat, trader 73 marked to the market. It is now 8:07 a.m. Eastern on 7/7/2014. Always willing to take the risk on a high probability trade setup, in this case, to the downside for the short, looking for the follow through. We have the best entry. We are looking for continued movement. It's early, this can happen. It's either this or prices will return and to the upside and we'll be out. So it's going to have to play itself out. 72.75, got to get through that level. $73 marked to the market. So once again, now that prices have dropped and have sustained the area on two closes at 72.50, that would have been a quick half a point profit after the preferred in was identified right here. At 7:55 a.m. this morning, price is still holding for that half a point gain. $73.25. Right. (8:12 a.m. 7/7/2014). More volume coming into the downside is exactly what we need to drive the prices back off of the 73 level and continue to move to the downside. The 72.75 level on the 15-minute charts has already been violated. Here we have it. Now we're back to 72.75. I'm referring to the low that's punched through, and now here we are back down again. Trendline violation intact, absolute change, done. And then retracing back up. So this level becomes more and more important as time goes by at 72 and 75. If substantial volume comes in 4, 5, 6,000 contracts for this time of day at 8:14. That would be more than enough to drive the prices down to some of the 15-minute data points that we have located for, say, 71, 75, 70, and 25, right? Here we are close to 71, 75 right now. Price is finally moving to the downside on some increased volume. So 71, 75 is a definite target. Right now, if you're in at 73.25 at 72, well, that's a whole point and a quarter gain right here. If you're in at the preferred end at 73, then you're looking at 72 right now for a quick point gain. At the end of the day, literally speaking, and yes, in real time here, what we're referring to is the accumulated points that can be gained in a session. Because when it all rolls up at the end of your day, even a point here, a point on another trade, that's more than enough to walk away every single day profitably. Prices are trading 72 right now down to 71, 75 people. That's your incremental price profit target reached. On the 15-minute chart, 71.75, done. For those of you who had a target at 71.75 on a limit order, you're out. And there you are again, market order out, honor that. The accumulated volume is fair. There are possibilities where the 15-minute indicator set up across the board according to this methodology is still clear to remain short. Prices could continue to move to the downside. $71.75 MTM. This is Jeff Killian, the Chief Market Strategist for the Inside Technician, demonstrating within the NinjaTrader platform a real-time trade that was identified with, at this point, right here for the preferred fill that came in at 73 and reaching a price profit target here at 71 and 75 people. 73, 71, 75. Excellent early morning profit. And now price is trading back up. Now once again, you have reached your 71.75 15-minute secondary support level. That may be as far as prices go. Let's not forget to remember, traders, that the smart money bias market trading call is long with strength. The market is trading up. So anything that you can get on a short trade, on the give back, on the retracement to the downside is a gift in this case. There are always possibilities that, last week's close in the U.S. markets could be the absolute highest price that the market will ever reach, and prices will continue to trade to the downside. But that's not confirmed until all the end-of-day indicators have definitively turned back around. And we have an established market turning point to the upside for prices to get through that back around as in a pivot point high, right? Trendline violation on the prices as well in order to consider being short and trading more than the minimum contracts. Now, for the longer-term holders on this trade, you are good, clear to stay short, looking for additional volume to come in for another leg to the downside. Right now, as we take a look at the check and money flow, trendline violation absolute. Now we're back down to the internal support area that I laid out about an hour ago for you. And here we are getting through 71.75, and the next target becomes 70 and 25. And here we are. Price is continuing to move to the downside. 70.75, and we're looking at 70, a 1-minute chart. The big difference here is that there was 1,495 lots traded at 819. So on a 15-minute basis, the floor at 71.75 is still held. Is still held, people. And price is now moving back up. Possibilities of that floor being the absolute price point that's hit at 71.75, now to be traded up from. This will play itself out soon enough. However, let's look at the larger picture. The EMA's very strong to the downside. SMI still clear. Check and money flow is clear. The MFI, short-term money flow index, trendline violation, looking to get through the secondary here at this point for the additional confirmation. I'm going to switch these two out, and I'll get this on another screen. I need to monitor that. $21.65 contracts traded at 8:20 a.m. $71.75 held 71.75 traders. 15-minute level is held. Now price is back up. So that's pretty much bets off if prices trade any higher on a 1-minute chart. That prices will continue to move to the downside. Strong volume comes in. Floor is honored at 71.75. Tough to want to hold on to a short. If you get above 71.75 by another quarter of a point, other than 72, okay, 72.25. That might be tough. I'm personally already out of this trade. And if prices roll back around and continue to trade to the downside, I'll consider another leg at a new preferred entry price. And that will be a quarter of a point below the union of these two data points. So once again, 71.75 honored. Strong volume comes in for breaks and pushes the prices back up. So this is a prime example, people, of where to get in and where to get out on a rally to the downside for, say, 71.75 or even lower before prices have a chance to move back up, getting out at a pre-established price profit target when the market is in this environment, as we talk about so many times in this live trading room here at the Inside Technician. Locking in the profit for the accumulated points at the end of the day, the end of the session, is really where we need to focus on. There are possibilities of prices continuing to move to the downside, but where the 1-minute chart is up, we locked it in, and we basically are in here and then back out after a turnaround, after a large bar down, right here, once again, on the close at 821. At 1971 and 75. Out at 1971.75 after the in at 1973. It's a gain of 1.25 points times $50 for every full point move is a 62.50 contract gain times the 20 contracts traded. My minimum is $1,250 to me today. For more information about this live trading room, you can go to theinsidetechnician.com, our website, and go to the live trading room, and you'll see the blog and the necessary sign-up area there for an unlimited time access pass to this room. Jeff Killian, Chief Market Strategist for the Inside Technician, 8:24 a.m., 7/7/2014, signing off until the next profitable trade. has identified with, and I've taken the trade to the short side based on an early in at 71. If this is a shakeout to the downside, I'll be right back out as fast as I got in. The setup is good. The prices should follow through, and in the case, once again, that they don't, we'll be out of this trade based on a blow off to the downside. Price trading mark to the market, 71, 71, 25. Looking for the continued move. Targets 71, 70, 69.25, 68, 50. (9:40 a.m. Eastern Standard), trading ES near contract month 9/2014. MFI on chains clear to stay. Be short. EMAs looking for the additional trendline violation to the downside on SMI. EMAs are good. MACD shaken. Prices back up. Possibilities of getting out. Real soon if prices don't continue to move to the downside. If prices hold resistance at 71.25, that'll be positive for the continued move to the downside. $71.25 MTM, 71.25, and back up a quarter. Just about there, hand on a trigger to be out. Let's give it that quarter and let it play itself out, traders. MFI is clear to be short. All indicators clear to be short. It's a good setup. Reasonable stop. 9:43. Looking for the continued move to the downside. And back up a tick. 71.25, 71.50, 71.25. Back up. Hand on the trigger. Just about out. And getting out now. Okay, so there's the fill. 9:45. And I got out before prices rose up. 71.50. Yeah, 71.50. So there's a half a point loss on that trade to me, 71.50. There is possibility that prices can trade down. But right now, getting off of that turnaround, off of that floor, 70.75. Was the right decision to get out. Down a half. Okay, people, chart pattern wise, we need to come back around for a secondary preferred entry point based on this bar's low. That number is going to be 1970 and 50, 1970 and 50. So we'll get that in. So one profitable trade here for a point and a quarter and a quick out at the best possible exit as you saw me. Call it just before prices shot up here. Would have given back a lot more for only a half a point loss here. Now at 9:47 a.m. we'll cut the tape and pick it up on the next leg to the downside. Prices continue to move in that direction.